what, how important is the role of regulators in all this? And related to that, can you share with us what your call is in terms of regulation being harmonized
Yes.
for, I mean, across Africa?
All right. I think regulators have a key role into our journey to inclusivity. There are several areas I feel they have. If we look at it even just at a domestic level, interoperability to happen in a market typically has been driven by the regulator, with some exceptions where, for instance, in Tanzania, we've seen that driven by the ecosystem coming together and building inclusivity. But in most countries, having the regulator, a neutral party with also the ability to enforce when it's not seeing it happening in the ecosystem, has helped to mandate interoperability at the national level. And also they can balance the private sector interest and the interest of us consumers and population to make sure that the decisions that are taken at the scheme level, the rules that are set, are really to favor and push inclusivity. And most of our countries have national financial inclusion strategy. We have them at the regional level. So from that point, the regulator is the one that can level the playing field and making sure that the private sector, bank or non-bank, are all coming together to better serve the consumer. That's one. A second area where the regulator is key is looking at how we facilitate cross-border payments, especially in the context of the Africa Continental Free Trade Area, where we are opening our markets to any provider, any consumer, any business, in a small, medium, large enterprise, to not only serve population in your country, but also beyond your country. So bigger market for all of us. But we all know for commerce to happen, somebody has to be paid, somebody has to pay. So the regulators have an opportunity to enable a seamless cross-border instant payment ecosystem across Africa. The complexity is that at a national level, we have regulation. At a sub-regional level, we have regulation. And continental level, we need to find harmonization principle, guiding principle, whereas you regulator A will recognize, that regulator B guiding regulatory principle are aligned, and you facilitate the emergence of pan-African, payment service providers that could better serve us. So the regulatory and harmonization and a policy is key, and part of it is regulations, particularly on licensing of financial service providers, proportionate, risk licensing mechanism, especially for the ones like the fintechs and startup who are not taking deposits from consumers but can provide agile solution. There's also regulation on knowing your customer and the due diligence of customers
And
as
even
part of the financial
identity,
service.
even
Yes,
how
on
to.
identity, of course, and they are different by country. Although there are guiding principle at a global level, the implementation at each country level is a bit different. So finding at least, harmonizing so that across Africa we are able to enable seamless transaction is also a key part of the equation. So, and when you take this all together, yes, the regulator has a key role promoting interoperability, harmonizing regulation and policy. But I think there's even a bigger role for the regulator. Technology is moving fast, innovation is coming. We have 400 million people that are still excluded.
Huge
If
gap.
we need to enable more solution, customer centric, fast, instant in this market, regulator has to balance how to catch up to these innovative solutions, how to offer an enabling environment for experimentation of this solution so that we can balance the benefit of financial inclusion with the risk of maintaining, of course, the stability of the financial ecosystem. So a lot to
We,
do.
we will come and talk about the 400 million, particularly with regards to your research into the consumer, what the consumers say. But let's stay with the regulator for a minute. In your research, in putting together this report, how forthcoming were regulators in terms of diverging of data?
I think the data part is critical because we analyze the data to understand the insights, the learning, and also know what the gaps are and be able to get back to the ecosystem with the insights of the report. This is the second edition of the report. So in the first edition, we did a lot of desk research, which looked at in the public domain what's published, We did interview of the different stakeholders. For this second report, we went a bit further and we sent a letter to all the governors of the central banks in Africa, asking specifically for the data, so we are able to include them into the report. Thankfully, we've received feedback from 5 central banks: the Bank of Ghana, Central Bank of Kenya, of Central Bank of Madagascar, Central Bank of Mozambique, and National Bank of Rwanda. So these 5 central banks have shared the data with us, and this has enabled a much richer report this year than the one we had last year. Again, remember, out of 32 instant payment systems, we estimated the volume of transactions for only 22 of these systems. So the more central banks, the more instant payment system operators sharing their data with us, the richer the report will be, the more learnings we'll be able to share across the systems so that we can all learn from each other and fast track our journey towards financial inclusion. We were not alone on the journey of data. We appreciated the information that was gathered. And as a matter of fact, Central Bank of Ghana and Central Bank of Malawi, in the data they shared us, was even more advanced because it was disaggregated by the type of transactions happening, transactions that are on us in a closed loop ecosystem, but transactions that are also off us. So what's switch and what's not. So the quality of the data enable us to be even finer in our analysis. So this is a call to all of the central banks that are out there to help us. And also, I have to mention that we did get information from the instant payment system operators themselves, which has helped us a lot. And these include the GMAC Pay system that I had mentioned, Ezekiel in Zambia, NatSwitch in Malawi, IPSL in Kenya as well has provided us the
Gibbs in Ghana.
information. GIPS in Ghana, of course. And GIPS is truly, for us, a great example of an instant payment system that has been diligent in collecting and publishing the data. We actually didn't have to go ask the GIPS. The data was right there online, and it was a very rich data for us to leverage. So I hope that in the next report we're able to collect more data, so we get a much richer report, and we're able to share best practices. We're able to analyze what works, what hasn't so much, where we can do peer learning opportunities for all of the stakeholders in Africa to build on each other and not have to reinvent the wheel whenever we are developing these instant payment systems.
You at some point you did call on the stakeholders to, in disaggregating their data,
Yes.
they should they should focus on gender
Yes.
as well, because the gender gap is huge.
Yes.
How important is that?
Well, look, I think there's a book actually that says there is nothing micro about half a billion, billion women in across the world. There is nothing macro about it. Out of the 400 million Africans that are financially
Mhm.
excluded, 60% of them are women.
Too bad.
There is a gender gap in access and usage of digital financial services. But for us to really assess the gap, it means that we are measuring, how many women have access, how many women are using. There are not a lot of central banks in Africa and service provider who are disaggregating their data collection by gender. If we were able, and if regulator were mandating such disaggregated data collection from all of the service provider, then we will be able to see at any time, oh, in our country, this is the percentage of women using the service, this is the percentage of men using the service. So I think that's a first step for us in getting the right data information so that policymakers can make data-driven, policies to ensure that access is really open and we are enabling more women into the digital financial ecosystem. So this is really a call for me that I'm putting out for all the regulators to mandate sex disaggregated data collection from the financial service providers. and that alone will help us get the data. And of course, there are also policies to put in place. What we've heard from women is access to the device can be a challenge. Access to identity can be a challenge in order to open a digital account. We've also seen that sometimes the digital capability to be able to use the system can be a challenge as well. And of course, access also to credit, there's a big gap, and those are challenges. So I think there's a opportunity for all of us, and particularly the governments, regulators, in enabling in our financial inclusion strategy to really focus on gender inclusion as well, and provide the incentives in the ecosystem. In digital financial service, agents can be a great way to also fill the gap. If somebody doesn't have a mobile phone, they can help by doing the transactions. Women agents will help also, because they will put other women more in at ease in doing business with them. Governments can have policies where devices are really available at no cost or a very low cost, so that we have more women with access to devices. And financial education, digital literacy programs also will help in building that confidence in digital capacity.